Well, it seems we've reached a milestone in US equity indices. We've just seen the S&P 500 futures breach and trade above the 5,000 level for the first time. We've seen the S&P cash market kissing that level, and we see the Nasdaq and Dow pushing all-time highs on a consecutive basis. It does seem that you can throw pretty much anything at the market, be it a pickup or a rise in regional banking concerns, a rise in the US dollar, real rates, and a repricing of Fed expectations, and the market absorbs it and makes new all-time highs. Pullbacks are really giving the bears very little to work with at the moment, and it does feel that until we see a change in the data flow that ramps up the prospect of a recession, or we were to see inflation concerns re-establish themselves, that the trend in US equity markets is your friend. Now, what do bulls like at the moment? I think on one hand, the Fed put is alive and well. The market knows if there's a systemic issue or if there was an event which caused a deterioration in economic conditions, that the Federal Reserve would step in and save the markets. We've seen pretty good earnings season. Now we're coming into the tail end of US earnings season, but we've seen 5.2% aggregate earnings per share growth and 4.1% aggregate sales growth. Now we might not have seen the sort of levels of beats that we typically see, but that level of earnings growth on a broad basis has been fairly compelling. We've got low volatility across markets at the moment, be it that on a realised basis or implied. And volatility dynamic or targeting funds are drip feeding more capital into the market on this propensity that this low volatility allows them to do so. We've got trend following systematic funds which are seeing the market going up, and their rules dictate that they need to continue buying equities in that situation. Corporates are buying back huge levels of their own stock at the moment, and that's suppressing volatility. And we've got options dealers with the rise of zero DT options continuing to hedge their exposures by buying the underlying as well. And I suspect some of the money coming out of Chinese equities would be going into US equities as well. So there's a lot going right for US equity markets, but traders are saying this move is just too hot to chase. But pullbacks refuse to happen in this market. So what causes a change in the trend? Or will the market build on 5,000 and continue to push up going forward? It's time to put US equity indices on your radar.